The SharePickers Podcast.
And joining me on the podcast and live on video, smart casual, it's Vadim Alexandre, Head of Healthcare at SP Angel. He's obviously in his home office there, working remotely.
How you doing, Justin?
Yeah, not too bad, fella. Good. Do you know what? My wife isn't here with my youngest son. They've just gone to London. My son has got a lung condition. And he often goes to London for quarterly checks or half-yearly checks, but he also has a local doctor as well. And my wife, Megan, said, we're going up to London to have this test. And I didn't know what kind of test it was. It's a bit like that Polarian, she said, you mentioned. I thought, really? And that's all. So I didn't realize they were using it in there. And then she's come back with, it's not with Polarian. It's with Siemens MRI, and they're doing a clinical trial on oxygen-enhanced MRI. And I'm reading these documents here. So you've been asked to take part in a study organised by a professor who's looking at a study team as part of the Imperial College London and the Royal Brompton Hospital. The study is funded by the CF Foundation. And basically, it says, improved treatments and better care mean we need new sensitive tests to see how healthy our lungs are. A test called Oxygen-Enhanced Magnetic Resonance Imaging, or OEMRI, may be able to do this. It's like a CT scan, but it's two main advantages. One, it does not have the radiation used for CT and X-rays, and B, it shows how well the lungs are performing rather than just showing a picture of the lungs. We have some promising early data on the usefulness of OEMRI, but before we recommend using it as regular tests in the clinic, we need to answer a few questions. So they give questions, but it's a clinical trial. So it's very interesting that in two reasons. Oxygen, I don't know how safe for that. Well, obviously, we breathe the oxygen, so it's going to be quite safe, but it's enhanced. It's not xenon gas, which I suppose is quite stable and quite safe as well. But also, my son is like 11, or he's going to be 11 next week. So I know Polarian, it's 12 and above, isn't it, theirs? They've got passport. But this just shows how fast technology moves on. I know Polarian's got quite a few years advantage because they've gone through all the clinical phases. But this here is like for patients from, I think it's from ages, I think children or adults with CF. So that's where it is. So it's quite interesting that there's a lot of competition here. And maybe, within the industry, maybe that's part of why the share price of Polarian have softened. I don't know, because I'm assuming these people, because I made the professor who's doing this, aware of Polarian a long time back. And now they're taking part in this trial. But it's just very interesting how the market's evolving, and like I said, the companies with a moat, how long could you have the moat for? But very interesting that, isn't it?
Well, definitely. I know that I remember from the years in development for Polarian that there were two other gas technologies. One of them was oxygen, so that's probably the one you're talking about now.
Okay.
And the other one was helium. And the issue with helium is for whatever reason there was helium was dropped by, I think, GE at the time, because if you remember, Polarian's technology came out of GE. It was spun out of GE, and then Polarian took control of it. But they had a helium technology which was dropped earlier in the process. So for whatever reason, I don't know, xenon seemed to be the first one out of the gates. But I know that oxygen was another one. What I would say the difference is, you're right about the mode. It's interesting that this is coming in the pipeline. I think earlier on, Polarian weren't very concerned about oxygen, but Polarian got to the, if you like, clinical approval, and this one is still in clinical trials, right? So there is a difference there. In terms of the indications, it's interesting. Look, I haven't done a review of the oxygen technology in terms of what other clinical trials they're doing. But it seems like what you're describing is one indication in pediatrics, whereas if you look at Polarian's approval, it was pretty much across the board. Not in pediatrics, you're right, but it was for ventilation use. So that's a very broad indication. Okay. Yeah. Now, I know that Polarian want to go after a second indication, which is not just ventilation. Ventilation means seeing what part of your lungs ventilate, right? So if there's an obstruction, or if there's a part that's affected by some kind of constriction, like asthma or COPD, ventilation tells you what part of your lung is getting air. Okay. Yeah. But pulmonary, there's gas exchange, which is more sensitive, if you like, because it tells you what part of your lung is actually exchanging gas with the blood. And that really is a functional test that's very important, and a potential function of xenon technology. Now, the trial you just described seems to be gas exchange, which is interesting too. But it is earlier in the pipeline, you know?
Yeah. No, it's interesting. I mean, it's been very hard. I don't know if you noticed this week, but biotech companies, pharma companies, small ones, have been taking a bit of a hammering, haven't they? I mean,
Yeah.
Polarians are just touching. Look at that, an all-time low again. I thought there was promises of a rally here, but it hasn't materialised. And in fact, I used to hold Destiny Pharma, taking a massive knock. Look at this, it's back to where I bought it at down here.
Yeah.
20, well, below that, 25 pence. And so there's a lot of selling off going on. And I think it's maybe the market's a little bit rattled because there's a couple of like Redex and C4XD have delisted. So you see a lot of these companies who are pre-revenue loss-making, and especially if you're a high cash burn company, which I don't think Destiny Pharma is particularly, but I mean, I guess C4XD were. If you are a high cash burn company, it's difficult to raise that amount of funds, isn't it? And that's holding your valuation down.
Yeah. No, I think, it's been a kind of a tough month. There was a good rally earlier on in the year, and it seems to have been smothered a bit, you know.
Yeah.
That said, there have been, a company called GenEncode is another one that's bounced quite aggressively off lows. So, I think it's rallied from 350 or 375 all the way up to 8 or 9. So on good news, there's some study on one of their cardio products. I didn't really have much chance to review the data itself, but clearly the market's reacted to it. Now these are all-time lows, right? So it's going from a very low base, but some stocks are rallying. Is my point. You are seeing some rallies still. So it's a bit of a mixed picture. I do think you're right that the delistings aren't helping. That wasn't that the Redex and the C4X were kind of cast a shadow over some of these stocks, but others are rallying. Yeah,
I'm just looking at GenEncode. So it's showing here as a 14 million market cap. They just did a placing back in December. How much they did there? So they raised 4 million. Okay, so they got a bit of cash.
I think they're cashed up. I think that's your point earlier on, that some of these companies, before they get cashed up, it's a recurring theme that you and I have discussed. Until they get cashed up a little bit, it's not the time to buy these stocks, right? Because there's obviously under duress, most of these placings are done at a steep discount. So once they get cashed up, they're in better position. I think that placing was done at 4 or at 6p. I can't remember.
Yeah. Well, the half year operating loss of 3.6 pretty much million. Yeah. So again, you're thinking, unless they bring that down, that 4 million, how long is it going to last? And you don't go back to the market. In fact, a good example of this of being punished. There was rumours apparently on bulletin boards of Rockfort Therapeutics in a sort of cancer area, and look at that.
What happened there? Was there a placing? Is that because that was just days ago? Right?
Yeah. In fact, there was apparently they said that they came out today with an announcement. I mean, this is the first I've heard of it, but I don't even look at bulletin boards, to be honest. But response to share price movement. Now, this is you can't win when this kind of thing comes out because first of all, it says a main listed biotech company focused on developing first-in-class medicines, high-value, high-growth oncology market. Notice recent bulletin board speculation about a placing that the company may be undertaking. The company recently engaged advisors to commence a process of market soundings in relation to a potential fundraise. However, in response to incorrect bulletin board comments regarding speculative placing price and resulting unusual price share movements, the board has decided not to proceed with any potential placing at this time. But the thing is, it is like, if you need money, you need money. So if you've gone out looking for a placing, in this situation, I do think this is the functional market here. If a company is going for placing, like in Australia, they should spend, stop trading in the stock because you get into a downward spiral of speculation pushing the share price down. And then maybe you had a pre-agreed price for the placing and you can't do that anymore because it's gone below that. So there needs to be something sorted here, doesn't it? Because it's affecting companies, potentially very good companies, from raising the money they need to conduct the operations they need to become, a successful business. So it's, I just think it's, what's your thoughts on that? Would you think that suspension is, because sometimes you have the silly situation where you're a company that's dual listed in Australia and AIM, and they'll suspend in Australia, and people go, and the shares in AIM will drop, and they can't on the ASX. It's a very odd situation. It should be one rule for all, I think,
It is. That is odd. I mean, those are unique, dual-listed. I don't know. I don't see that. I don't see many Australian companies. But overall, it's an idea to suspend. It is. The problem with suspensions is that, in a part of having an open market, listed, company, is that you're supposed to be able to trade effectively at all times. Suspension is kind of, it's a block to all other shareholders. Do you see what I mean? So, unless you're offering that stock to all shareholders in the company through an open offer, then you're kind of cheating on some people if you suspend the stock. Do you see what I mean?
Yeah, I see what you mean. But when you have, but first of all, I mean, if it was inside information, it shouldn't be shared. It has been. And so that's someone breaking the rules. So in that situation, I think there's a special situation where we're suspending because we can't carry out a fundraise because people are being, leaking news, which is illegal. And
I understand why you're suggesting it, and I agree. I mean, it would be a nice mechanism because then the price is fixed now, until a placing is complete, and then fantastic. The problem though with suspensions though is that, let's say it's suspended for supposedly a week. What if it takes 3 weeks? What if it takes 4 weeks? You know what I mean? All of these other players that are involved in the stock are just stuck. They can't do anything, right? So it punishes everybody also at the same time. I know where you're coming from. It has inadvertent or adverse consequences that suspension. I know that most exchanges kind of loathe suspending stocks, right? Because the whole point is you're supposed to have a free and open market at all times. So when you suspend a stock, it's a private company for that period, right? Which is not the spirit of an open market.
But I understand, but it's a great discussion. I understand completely that you should be allowed to freely trade in it between the hours of 8 and 4:30. But like I said, if you get something where the function is breaking down, like I said, leaking news and all that stuff, that's a special situation. I think there's a rule in AIM. Someone did say once, a company I interviewed was listed on both, saying there's not the rule in AIM, you can do that. You can do it on the ASX because there's a rule in there. And so maybe I think in special situations where, because essentially it prevents companies from doing what, especially junior companies, pre-revenue or loss-making companies, doing what they came to the market for. So, if they can't do that, they can't carry out that function, there's no point in them being listed. So they may as well delist, and that will affect the market. And so if that's what AIM wants, then, don't amend it. But I think if you want to have a market where, stocks don't tank and they can't raise money, they delist, because that's what will happen in the end. I mean, especially in this environment, we're seeing so many delistings. So
Look, I find it interesting, like you say, there's a precedent in another market with, the ASX. So that's, these markets can learn something from each other. So I don't know the minutiae of the rules there, but surely it works because it's, it's an established market. So, maybe they can learn something from them. Yeah.
Yeah. And it's been a tough market of late because I don't know if you're already over this, but there's, I think it was like I was listening to something yesterday and someone said initially, they were thinking that interest rates would start coming down back into 2023. Yeah. And then they said it'll be the first quarter of 2024. And now you're getting sort of members of the Fed saying if inflation keeps coming on like this strong, we won't be reducing interest rates. So the market's had a bit of a rollover yesterday. The Dow was down over 1%, I think. And that's happening. So this is largely why I said, when the environment changes, you've got to change your investment thesis a little bit. And so and I know yours has as well, but going back like sort of 2 years, 80% of my portfolio is loss-making companies because money was cheap, it's easy to raise, and when that happens, the forward potential is built in, and that's where aggressive rises happen. But now, I mean, so most of my stocks I hold are, profitable. I've got a few sort of loss makers, but they got cash. But I think that's the way forward for a while. And even if we start reducing rates, if it's this year, because they were penning in 3 reductions this year, then I was saying there may not be any. One of the Fed members said, then it's going to be hard. They're not going to come down fast either. So I think you've got to, readjust your portfolio a bit. Yes, have high potential stocks in there, but they've got to have cash. But when they don't have cash, like
completely agree. I mean,
Rockford.
And that's exactly like what you and I have been discussing literally for 2 years now. This downturn in small cap stocks has been very long. But yeah, so I've moved started to move into the mid caps about that time, about a year and a half ago. And you know, companies like, because you just want exposure to some of those. What I considered, a lot of the UK mid caps are still cheap. You know, the companies that we've discussed here, like AO, like Deliveroo, which are the ones though? EasyJet. Those are all stocks that I own that I like, you know, and they just got so smashed by the downturn that you know, they were due. Well, in EasyJet's case, it was due to COVID, but they're recovering, you know, and they're recovering nicely, and they're businesses that have huge revenues that aren't recognized at these prices, in my opinion. So yeah, I agree with you. You want exposure to some of these companies that where I find globally is I find UK mid caps are completely not priced. They're not priced to like. There's been a rally in global markets, and UK mid caps just haven't reflected that yet. And I think there is genuine opportunity in that space. Back to your point about cash generating businesses, and you know, some of them weren't. They were loss making, and you know, that's what the downturn hit them hard. The cost of living crisis, you know, the post COVID high inflation environment. But they are recovering because they're big enough businesses to weather the storm. Not all of them. Some of them, it's still been painful, like the ASOSs of this world. You know, that's you know, there are problems, and you know, I haven't picked all right across the board. But you know, there are clear, in my opinion, there are clear advantages to some of them.
I mean, there's a world there. So we broke up last week, and it's still above that line, which is quite nice.
Well, you and I were talking about that last week. You were saying if it could just break over 100 and stay above, it's done exactly that. You're absolutely right. That was the resistance point. It just broke through it. Now let's hope it stays above that resistance point, the other way around. You know?
I want to bring your attention to a company I hold. It's not. I actually checked on several providers today for RNSs. I thought, what's going on here? Why isn't there any RNSs coming out? There's very little news out today. I mean, Beeks is a company I hold. I think it's a fantastic company. I think literally, it's one of those companies that has a market leading technology. Essentially, it's they specialize in financial trading platforms in the cloud for stock exchanges, and it's located in the stock exchange, but it's also a cloud-based model. And now you know, there are very few people who specialize in this, and I think they've got New York Stock Exchange has signed them, so one of the biggest groups of all signed up with them. And New York Stock Exchange, they were white labelers to any trader platforms. They want low latency trading platforms in the cloud. And they announced today a partner with SST. Now, if you look at it, I'm launching this very soon. This is the UK MicroCap League. These are all companies that are revenue generating below 100 million market cap, and I score them on everything. This is in alphabetical order. I'm not going to show you the ranks yet, but I score them on growth, value, health, momentum, all that stuff. But if you look at Beeks, and it's not ranked highly on this, but share price 170. Let me pump this up. 178. Target price is the broker's 260. That's the 12 month target. So this is what you get when you log in there and click this. But as you see here, if you scroll down, so this is full year results. This is half year results. Now these are more recent, and these are last year. You can see the improvement just in the colours. Okay.
Yeah.
From the full year to half year, and so you got full marks on growth. Now that's the most important metric for any growth company. Small caps should be growth company, or micro caps should be growth companies. And they're improving. So if you look on this side, the values here all in the red because they're not cheap. 5 times sales, but look at it slowly coming down because that's last year's results. This is to June last year, so we're literally almost a year out from that, and they've landed some big contracts since, and so the health is all good. The only question here is the value. But if you scroll down and you go to forecast, you can see revenue beyond 2024 is 34%, 32%, 40% next few years, and look at the margins. The EBITDA is going up, and so from 8 to 10 to 12 million EBITDA, operating 4.3, 6.1. And then you realize you scroll down and look at the value going forward. You think a PE of 32 for next year, down to 21 pretty much, and then 17. I think that'll get even lower because they are signing up and they land and expand. So literally the deal, first deals with exchanges, then they expand those agreements. But it's very interesting.
Do you find that it's not a bit overpriced now? I mean, don't get me wrong, but everything sounded good until the PEs. You see, the PE ratios are still quite high, and they're not coming down.
But this is a company. Well, this is a company that, if you look at it, I mean, if you look at the forecast there, this is a company now going up. It will be what they are literally 100. So they are 3 times sales on this year's results when they come out. Pretty much. That's not a lot for a company now. Just going profitable, and they reckon is the best in class. Amazon are in the cloud. Amazon are the big players in the cloud, and there's rumors if Amazon want to specialize in finance, which they don't, they'll buy these companies because this is the best out there. They are. Okay. Like I said, when you have a company that's being signed by the biggest exchange groups in the world, then there's no, you could value this on 5 even in America probably 10 times sales because now they're going profitable. They'll never go back to the market. Also like is the CEO and founder owns 33% of the company. So he's literally, skin in, and it's just improving. If you look at some of the contracts they've announced, it may have a little pullback now and again, but the growth is non-stop. I mean, this will grow as well. Of 2026, they land more contracts, and I guarantee that'll be over 20%. So the growth is non-stop, and the valuations will come down if it stays where it is. But I think it's a company worth keeping your eye on. Big financial. I think it's one of those, leading companies that will be a blowout winner in years to come. It'll be like, I've just seen that. I mean, when you land in the biggest stock exchange group in the world and several others, then you think they've got something special, because no one else has got that. Why wouldn't they sign with Amazon?
Yeah, and that top line growth is really strong here, indeed. Yeah. It's good to see. It's 30% plus, so that's very strong.
Yeah, and not only that, the good thing is, you see, when you get growth and margin improvement there, then you get re-rated. And then it goes up even further. And then you get institutions coming in even more. In fact, there's institutional demand recently, apparently, because Gordon McArthur, the CEO, he had about 37%, but he sold 5% to an institution. So I think it's quite tightly held. But I think it's a company worth looking at. Like I said, the share price has rocketed. I bought here on this contract news, and it's just shot up. But I think it will have that 180 level, 182, bit of resistance there. Then I think they'll release the results this year and say, wow, that's a marked Like I say, all you need to do is compare, the half year and how much more of improvement that is compared to last year's. And so basically double that pretty much. And so it'll be a massive improvement on last year. But it's one of those, look at that. I love that 200-day moving average. A couple of times it broke it. I mean, it's not even back to these 2022 highs there, but and they're a lot better company now. But it gapped up above a 200-day moving average, so always a good sign. And then you can see that next day, a little bit of a pullback, and then powering on ahead. So it may have to go sideways because trying to break this 180 level quite a few times. But I think longer-term play, what's sort of like here, it's growing, it's a market leader, and I think it's probably a takeout target for someone like Amazon. But to do some research on that, honestly, it's worth looking at. I mean, there's presentations on their website. Gordon McArthur, CEO, is a very approachable guy, and they've got their head switched on. I do like him a lot. As you can see, I'm a holder. I'm biased. Don't just buy them, everyone. If you're listening, think, because I'm in down here. So if you get in down here and it rolls down a bit, don't blame me. But I'm saying long term, I think it'll carry on powering away. But it needs to consolidate because, like I said, it's had a fast rise over a short space of time. But I do like it a lot. I like it a lot. Have you bought or sold anything, Vadim, recently or not?
No, not really, actually. I'm just waiting to see the final shakeout of this downturn, which is, we've had too many false rallies. So, I've been quite quiet and just sitting on my stocks.
This is AIM, I mean, that's the best thing to do sometimes, isn't it? That's AIM. I mean, I'm not. I'm looking at averaging up on stocks. I want to average down because they can go down further. But I mean, if they start performing out, as AIM is, it's still not above that sort of. That's 15% above the low, but that was like 765 on AIM. Back when was that in December? So a nice rally. Look at that rally! Wow, from October. Yeah, that was a good Santa Claus rally. And now it's going sideways for a while, but we are due. It feels like when you look at that chart. I mean, this is meaningless and same predicting the future, but it kind of the momentum has faded. But it does. It's exactly at these moments, and you see stocks like the one you just described, and Gen & Code being another one. You see stocks break out, and when they do, they're aggressive. 2-3 time returns very quickly. And that's what powers the next big rally, right? So it feels like if you look at the zigzag up. Provided we're not wrong and there's some macro event that takes us all down again, but interest rates are going to come down. That's still the forecast, and everything seems to be powering up for the next bigger, like the October to December rally that you have there. The next move up feels like it's
coming.
Yeah.
So but that said, I am not buying stocks. I might dabble in one or two in anticipation of that next rally.
Yeah, I mean, if you look at that, it's from October to December. So the start of October is that. So November, December, 2 months, 2 or 3 months rallying. You need 2 or 3 months consolidation, pretty much. And maybe it'll take a little bit of time, but I think this job figures out today. We'll see if it's down to the American economy. There's some people saying it is showing signs of weakening, but then other people saying it's not, and the consumer is still very strong. So that's the issue, isn't it? And let's say if the American, the trouble is the markets are rallying as well. It's the trouble. You want to say stop spending, Americans. Will you keep your cards in your pocket? Anyway, Vadim, good to chat to you. Have a nice weekend. We're speaking next week.
You too. Take care, Justin.
The SharePickers Podcast with Justin Waite. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.